Hello everyone, welcome back to Nathan Trading Academy. So today, 12th August 2026, in this video we will analyze the complete market setup for tomorrow, that is 13th August 2026. So let's begin. So let us first understand today's market. Nifty 50 closed 24,435, down approximately 35 points, and Bank Nifty closed 57,885. Gaining approximately 439 points. So the important observation is this: Nifty and Bank Nifty with different directions. So this tells us that today's weakness was not a broad-based collapse. There was a sectorial rotation, and financial stocks provided some support. Today's market was also influenced by higher crude prices and concerns surrounding inflation and global developments. So Reuters reported that crude was trading around $89 level, and that investors were watching upcoming Indian and US inflation data closely. Now let us look at institutional activity. According to this NSE data, FII's net selling, as you see here, 870 at NSE exchange, NSE capital market segment. The net selling is 817 crores. Now look at the DIA activity. So DIA net buying is approximately 4,322 crores. So this is an important point to understand. Foreign investors were net sellers, but domestic institutions were strong buyers. So the market currently has a tug of war, FII selling pressure and DII buying support. Therefore, I would not call the market aggressively bearish merely because FII sold 817 crores today. We need to watch whether FII selling continues while DII buying weakens. That combination would become more negative. So now let us look at the global picture. US equities received support from strong AI related earnings, with S&P 500, Nasdaq moving higher on Wednesday. However, the bigger issue for global market is still inflation and the Federal Reserve. The market is closely watching US inflation because it can influence expectations for the next Federal Reserve policy decision. Current market pricing has been reflecting uncertainty about the possibility of September Fed rate hike. Reuters reported that markets were pricing roughly 50% of chance of a September hike. Therefore, for Indian markets, US inflation data plus Fed expectations, important overnight risk factor is going to be there. If US inflation comes softer than expected, global risk sentiment can improve. Inflation comes hotter than expected, bond yields and dollar could strengthen, which may create pressure on emerging markets, including India. Now let us come to the Indian macro picture. The RBI remains important because the rupee is under pressure. Today the rupee was around 95.3 per US dollar. A Reuters report that RBI related dollar selling was helping to support the rupee. The current RBI policy repo rate is 5.25%. The second important factor is crude oil. Brent crude was around $89 per barrel today, with geopolitical tensions continuing to influence prices. For India, higher crude is important because India is heavily dependent on imported crude. Therefore, crude up, rupee weak, negative pressure, and crude stabilizing and rupee stabilizing, supportive for equities. So tomorrow, keep one eye on crude and USD INR. Now let us look at the India VIX. So as we see at the India VIX closed around 11.69. remaining at a relatively low level. This is an important. A low VIX generally indicates that market is not pricing extremely high short-term volatility. Therefore, tomorrow we should not automatically expect a massive directional move. The more likely possibilities are range expansion after a breakout or continued consolidation until a major level is broken. So don't chase the first candle, let the market establish direction and the important levels. Now let us look at the Nifty chart. So the most important part in this, like Nifty closed at 24,435. So here, when you observe this chart, something very important, the market made sharp intraday decline toward 24,265 and 24,300, but buyers appeared from these lower levels and brought back Nifty toward 24,436. This means the lower zone has buying interest. However, Nifty is still below the important level, that is 24,473. And therefore, tomorrow I will divide Nifty into three zones. Nifty resistance, first resistance will be 24,473. So this is going to be the first resistance, and second resistance, which is going to be 24,522, and major resistance, which is anyway at the 24,630. If Nifty sustains above 24,577, then we can start looking towards 24,630, and above we can expect 24,700 or 750. Then Nifty support, the immediate support which we see, this is the immediate support because market closed above this level, 24,430. This is extremely important because it corresponds closely with the current day. Below that level, price may move back 24,265, and the major downside liquidity level is like 24,200. Above it, recovery remains possible. Below it, market can again move towards 24,200. Now let us confirm this from the option chain. Let me take to the option chain. So the Nifty option chain data for 18th August expiry shows significant activity around the current price levels. At 24,400 CE, when you see this, there is 92,932 lakh open interest, 92,932 open interest with a substantial increase in OI, and 24,500 at the ATM, 1,37,000 open interest increases nearly like 58,550 contracts. So this makes 24,500 is very important resistance zone. On the put side at 24,000, there is open interest 1,18,000 with the strong addition in OI, and around 24,300 PE. As you see this, it is 86,719 and with a significant addition. Therefore, option chain is giving us resistance at 24,500 and support at 24,300. This is perfectly consistent with our chart analysis. So for tomorrow, bullish confirmation, if 24,577 price sustains above this level, we can expect price moving towards 24,700. Bearish confirmation, if 24,429 below this sustains below it, then we can expect moving towards 24,300 and 24,265 become the important downside levels. And if 24,265 breaks decisively, then we should expect further downside momentum rather than immediately buying the dip. Now coming to Bank Nifty. Let us go back to the Bank Nifty chart. So Bank Nifty is currently showing better relative strength than Nifty. Today's close 57,885 to approximately 439 points gain. This is an important bullish signal. On the 15-minute chart, Bank Nifty has recovered strongly. from the lower levels and is now testing this upper part of the recent range. So the immediate resistance is like 57,994, that is 58,000. This is the most important level for tomorrow. If Bank Nifty breaks and sustains above 58,000, then the next psychological and technical levels are 58,500 and eventually the previous major high zone. But if Bank Nifty falls below 58,000, then starts moving towards 57,800, and then we need to be very careful. So let us move to at Bank Nifty option chain. So which confirms that of 58,000 CA, like 58,000 CA, 70,000 which is 70,899, increased OI around 8,100, like what you see this is, which can indicate some unwinding of call positions, but we should not interpret this alone as a guaranteed breakout. We need price confirmation on the put side. 57,500, if you see, there is a 21,100 open interest. Fresh addition which is there, that is 2,820. So the 57,600 and 57,700 zone also show meaningful put activity. So therefore, Bank Nifty support is 57,700 or 500 and resistance 58,000. Above that, 58,200. So Bank Nifty has very clear setup. So what is overall view? So my view is Nifty neutral to mildly bearish until 24,500 is reclaimed. Bank Nifty relatively stronger, bullish above 58,000 because India VIX is low, indicating controlled volatility for now. And also FII net sellers and DI strong net buyers. Crude is going to play risk factor. Rupee still under pressure, but supported by RBI intervention. So most important aspect for tomorrow, which is going to be so tomorrow market is all about based on the confirmation. Remember that Nifty 50 24,500 is the gate for this bulls, and 24,429 is going to be the defense for the bears. So the wait for confirmation, wait for the levels, react. Don't predict the market, react to the market based on the candle formation. Then take the trade accordingly to your risk management plan. That's all for today's market analysis. If you found this analysis useful, so please like, share, and subscribe to the Nathan Trading Academy. And don't forget to comment below Nifty bullish, bearish, or range bound. Thank you for watching. Trade carefully, manage your risk, and I'll see you in the next market update. And finally, the next disclaimer. Nathan Trading Academy is not SEBI registered. All information provided in this video is strictly for educational and informational purposes only and should not be considered financial or investment advice. Trading and investing involves substantial risk. Please do your own research and consult a qualified financial professional before making any investment or trading decision. Nathan Trading Academy is not responsible for any financial loss arising from the use of the information which is presented in this video. Okay, friends, thank you for watching. Trade carefully, manage your risk, and I'll see you in the next market update. Until then, bye-bye.